Hello guys, welcome to my YouTube channel. It's your boy FX Yeah, so I'm back again. On today's episode of breaking down my strategy, I'll be talking on liquidity, guys. Liquidity. I'm sure you must have heard of it from different mentors, different forex traders and stuff. So I'll break down the way I see liquidity and how it works for me in my strategy. So currently, what is liquidity? In simple terms, liquidity just means money. It's where the money is. It's where the institutional traders drop the money and everything. So basically, when you think of liquidity, you think of the normal double tops like they taught us in basic chart trading, where you see the double top, that is liquidity. Where you see the double bottom, right? That's also liquidity. And then the trend line liquidity, where you have a bullish trend but then it's following a trend line. Yes, those are forms of liquidity, but liquidity is more than that, guys. So yes, let me delete this. Yeah, so for me, basically there are three types of liquidity. I repeat, there are three types of liquidity. Yeah, and the first type of liquidity I would say is inducement liquidity. The second type of liquidity is the structural liquidity. Now this particular liquidity, it's a very important part of my strategy. Once I can't find it in my strategy, I don't take the trade. Now the third type of liquidity is the transactional liquidity. Yes, those are the three types of liquidity. Don't allow the big words confuse you, guys. Don't allow the big words confuse you. So basically, the inducement liquidity is used for expansions. Let me write that out. For expansions. And then structural liquidity is used for continuations. Used for continuation, guys. Now, most times, not most times, every time, your structural liquidity is the last low before the main low. The last low before the main low. Before the main low. The main low most times is your point of interest. So the last low before the main low, or the last high before the main high. You need to write that out. Then transactional liquidity is used for corrections. Don't worry, guys, I will show chat an example and everything regarding this in order for it not to confuse you. For corrections. Yes, so those are the three types of liquidity. So the first liquidity I'll be explaining right now is transactional liquidity. Now, like I mentioned before, transactional liquidity is used for corrections. Okay, and note what I'm about to show you is usually a transactional liquidity. Is not a transactional liquidity till price takes it out. Okay, let me show this with my algo structure. So this is my algo structure, like I taught in the last video. This is my algo structure. So we get a sweep, and then let's say the liquidity happened, that is the type 1 before the BOS, and then this is our entry, and then boom. Okay, so now this is the sweep, this is the sweep, mark that out. This is the sweep, right? Now, this right here is your transactional liquidity. Uh, Sorry, I don't know. Okay, so this place where your BOS, your break of structure, is supposed to happen is your transactional liquidity. So basically, this my setup, which you're also learning, cannot actually form without a transactional liquidity being taken out. This high right here is your transactional liquidity. So till price comes back and takes it out, you don't consider it a transactional liquidity. So it's just part of the confluence. So this point is your transactional liquidity, which is mostly the liquidity at your swing structures. So yes, this is a swing structure. So till price actually takes it out, you cannot consider it a transactional liquidity, guys. Yes, so like I said before, it's not a transactional liquidity till price takes it out. After which we start anticipating the reversals or the corrections. So till price takes out this transactional liquidity here, that's when you can start expecting price to come down into your points of interest or to come down into your POI and stuff or other block. So the price takes out this transactional liquidity right here, and it's not considered a transactional liquidity till you actually see price take it out. So the price takes it out, then you can start expecting reversals and corrections. Moving on to the next liquidity would be structural liquidity, which is a very strong liquidity which I use for my setups. So basically, structural liquidity, like I said before, is used for concentrations, and it is the last low before the main low or the last high before the main high. Now, using this algo structure I drew out here, most of you that have been following me would know that I always mark here as my structural liquidity. Now, you should have gotten the reason by now. As you can see, this is my main low, this is my point of interest, this is where swept this liquidity that was down here, right? So this is my protected point. So the last low before the main low, now this is my main low, this is the last low, so that is where my structural liquidity is. And if I don't see that in a setup, I don't take that trade, because when I go into inducement, you will find out the reason why. I make sure there's always a structural liquidity right here before I take my entry or actually start considering the setup. Now, structural liquidity happens for continuations, like I said before. Now, if you have structures like this, okay, let me draw this out, right? And then sweep, and then we start having internal structures right here, yeah. Now, some people might be confused, but people might be confused now finding out the structural liquidity because you're seeing many lows right here. But with the simple term I gave you, the last low before the main low, the last low before your protected point, the last low before your POI, the last low before your order block, the last low before your order block, that is your main, that is where your structural liquidity is. That is where your structural liquidity is, guys. So from that saying, you would find out that this is your structural liquidity right here. You have no interest with all this low You don't have any interest with all these lows right here. You're only interested in the last low before your main low, guys. The last low before your main low, guys. Yes, guys, the last low before your POI or your main low, it's your structural liquidity. It's as easy as that, guys. As easy as that. You don't need to get it complicated. You don't need to know every that. You're just interested in your strategy, what works for you. You getting too many information at times gets you confused because you are now seeing everything in the market. You're seeing trend line, you're seeing now maybe your setup now, you're seeing your setup, but based on another strategy, you're seeing that strategy too. Now that strategy is making you doubt your setup because maybe that strategy is telling you it to sell and your setup is telling you to buy. Knowing too many things confuses you. Now you will not have that confidence to actually execute your strategy, guys. Guys. So it's advisable to stick to one strategy. Make it as easy as it gets, as simple as it gets, guys. Yeah, make it that easy. Now to the next type of liquidity, which is inducement. Inducement. So the reason why I said if I don't see a structural liquidity, I don't take a trade, it's because if there is no structural liquidity, then that my point of interest or that my protected point is no longer protected because price will, on a scale of 1 to 10, price will come and take out that low 6 times out of 10 before actually going your way. So you actually get an SL before that's why you see some setups that you see that price takes out the SL before going to presses or before going to TP. So yes, guys, so if I have a setup like this and I'm seeing this, at this point I'm not even interested in market safe. I am not looking at it till I see something like this, which is the type 2 price coming here and then going back, making a structure BOS. So then I know, okay, yes, price has given me my structural liquidity. This is the liquidity that price will take out before going my way. But the moment I don't see this, there is a 60% chance, and we know forex is all about probabilities and percentage. The 60% chance price will come, take out this low right here, and then continue in your direction. So that's inducement liquidity, guys. That's inducement, and it will trick many people into entering the market thinking, okay, yes, this is a protected point, and then expecting price to price will come and take out all their stop losses before going to the TP. So yes, those are the 3 types of liquidity. Now let's go to chart example. Okay, this trade actually hit me. Anyways, by the way, so let me use this trade. This is a trade I just took on GPPNZD, as you can see, and it just hit a profit. Thank God. Yeah, back to the explanation. So from my explanation, now look at this structure. This is exactly what I drew before. Exactly what I drew before. A very clean explanation. Okay, I missed something. Let me delete that. Let me go. I took this setup from 1 hour time frame, so let me go to the 1 hour so so that the structures will come out well. Okay, so guys, here it is. So you can see, and price came and swept that low before going that way. But before price continued up, it created a structural liquidity for us, and then my entry, and then bam, we're out. So seeing it is still the same thing with what I drew over there. So explaining this now, what would you call here? From my explanation I gave before, this would be your transactional liquidity. This would be your transactional liquidity, which is not a confirmed transactional liquidity. Like actually, sort of price has broken that structure. So yes, that has been confirmed, a transactional liquidity. And then notice that before price went and broke that structure, it created a series of lower high, lower high, lower high, lower high, which is liquidity. But then I have no interest with all this right here. My consideration is the last low before the main low, before the sweep. And this is the last low, right? And that was why I marked it out as my SLQ. And then all I had to do was set my buy limit, and bam, price came in, tapped us in, and then headed to TP, guys. I don't know whether to use the word set and forget, but sometimes you don't always set and forget. I always advise you monitor your trades. You always monitor your trades. But then when you're sure your strategy works for you, like probability is always in your favor, then I advise once you take your trade, you set and forget, because at times always checking it 247 would actually make you start doubting yourself. So that's that example of transactional liquidity, structural liquidity, and then inducements. Let me see if I can find a setup like that. Okay, well, uh, let me see if I can see something like that. I'm looking for a sweep. Inducements. No, I can't find a setup like that yet on chat. Well, in my next liquidity video, I'll try to find out one for you guys and then show you a chart example. But just know your structural liquidity is very key, guys. I can't overemphasize on the importance. If you don't see your structural liquidity, then it's likely price you use like your POI, protected points, other block as the structural liquidity. So that's that for today, guys. Like, subscribe, and comment. Please interact. The link to my Telegram channel is under the video. Tap to join, and then let's learn together. Let's go together, guys. Peace out.